Welcome back, everyone, to Point of Sale, the retail supply chain show where we break down great retailers, including their data and the technologies that move their supply chains. And we've got a mix of fun stuff today. We're going to go through some news headlines that I thought was really interesting and informative towards where a lot of retailers are moving to and a lot of the investments they're making, and some of the unfortunate news that's coming along with the retail technology that we're seeing today out there. But we're going to end it off with a cherry on top of that sundae. Some positive news coming from the co-founder of ShipBob as we dive into how he is helping retailers and their company is helping retailers invest in their own supply chains, make them even more powerful through these times, and make sure that a lot of these small and medium-sized retailers are still have the technology to fight against some of those larger retailers as well. But let's start off with some of this fun news. One of the best news stories that come out of this week, for me personally, as a reporter behind it, probably a little bit biased, is Walmart is now partnering with Platform Science. Now, I'm sure you're like, oh, here goes Grace on a Walmart rant quite again. And I have to say, is one of my favorite retailers of the last couple of years when it comes to investing within their supply chains and how they're moving their goods to their consumers. We have this huge behemoth out there, Amazon, who's not only providing a lot of the third-party selling platforms that Walmart is providing as well, but they've got one of the largest logistics companies behind them too. So Walmart's, they're doubling down on that. They want to be as competitive as its biggest competitor out there. And I got a really great opportunity this past week to talk to Scott Donahue. He's actually Walmart's vice president of supply chain product and an entrepreneur himself, co-founder Jake Field, the CTO of Platform Science. Now, for those who don't know, Platform Science is a telematics company. They offer a tablet, ELD pretty much is what it is, that connects into their trucks in order to provide a number of solutions. Imagine it almost the modern day iPad, where you connect it into your truck, and you're able to download a number of different applications that would allow you to improve the driver's time, scheduling, warehousing information, connectivity information, real-time visibility products, all of that jazz, and of course your hours of service as well. So recently, Donahue actually got to meet Platform Science at a Plug and Play event. Now, Plug and Play is a venture group that I've brought up in the past. I got an opportunity to interview when they just recently raised, I believe, $25 million for new funds. But Plug and Play is kind of like a recruiter for tech startups. It's a really interesting type of venture group where they basically put on a number of events and help connect large companies like Walmart, Panasonic, C.H. Robinson, or a few other companies that work through them as well. And they help recruit tech startups for the technology solutions that these big players are missing. For someone like Walmart, who has so much expertise in retail and how to manage inventory and to manage warehousing, they do have their own private fleet, but coming up with fleet technology is not their stronghold. So they found Platform Science, a tech startup at the time, started working with them on exactly the type of technology they need inside their trucks. And as of February of this year, they started integrating their Platform Science's technology into their 12,000 trucks within their private fleet. Actually, it was a very impressive integration period. It only took a couple of months, less than a quarter, for them to get all 12,000 trucks integrated into the system. And now they're able to leverage Platform Science's tools when it comes to finding weigh stations and other applications like that with their own application, Walmart's End Transit, which they've created in-house that allows them to schedule their drivers, keep them moving, and get them home on time. Donahue said that the biggest impact that this has had is actually had on driver retention, keeping drivers happy, making sure that they're home on time, and their satisfactory scores skyrocketed up to about 80 percent approval of the technology and of the job itself. So on top of that, they're of course hearing great news from customers as their on time scheduling is improved, that they're picking things up when they should be, and of course stocks shelves are being stocked at the rate that they should. So I thought that was interesting. It's for me powerful to see how companies like Walmart are a finding the technology that's right for their business, but b partnering with the right partners to make sure that they have a long term solution. Best part about platform science is they add more technology. Walmart gets to, of course, win off of that. And as Walmart continues to add more drivers, add more stops, basically every day they're operating on the platform, platform science gets to leverage all of that data in order to make even better products for the OEMs that they're now working with as well. So, platform science, another aftermarket tool that I think we'll see more of within trucks as they grow. But happy to see that Walmart itself is taking a step towards making sure their drivers have the best technology right in front of them. Other news: Target opens up more sortation centers. They are normally called distribution centers in most places, but Target does call their sortation centers, and they've opened them up in Chicago and Denver. This is actually part of a $5 billion future investment that they're overall trying to capture. It's going to be adding also 4 more distribution centers, and they'll have 7 more of these sortation centers to come. Well, why is this important? Why build these? Well, I think this really points to the importance of these smaller mini fulfillment centers that we're going to start seeing pop up for retailers all over the United States. And when it comes to that same day, next day delivery, you have to be pretty close to the customer to pull that off. So we're going to start seeing a lot of retailers mimicking a lot of the moves that Amazon has made when it comes to distribution centers across the United States. And I think we'll see even more of these smaller centers, these sortation centers for people like Walmart and even Target who are trying to get their footprint all across the U.S. as fast and as effectively as possible. And then, last but definitely not least, we got Shopify, who just cut 10% of their workforce. And this is really important, and I want to discuss this with our guests a little bit today. Of course, they saw this 5-year leap in e-commerce demand throughout the pandemic. All of us saw it. And what one can do is either double down on that and say, hey, I think we're going to continue to see a 5-year leap in e-commerce growth over the next 10, 20 so years. Unfortunately, I think because of where the economy is, that's not happening. And Shopify believe that themselves, apologize for the overbet in a way within that release of employees, which was honorable. And they cut mostly spots of recruiting, support, sales, and social over specialized type of jobs, including duplicate roles as well. So I think you're starting to see a lead it into a decrease in investment into these technologies, and now most are trying to tighten up operations and strengthen themselves for the future. And I think why not talk with someone who's doing much of the same thing? And that's why we have with us today Dhruv Saxena, the co-founder of ShipBob. It's a global omni-fulfillment solution. So we'll get an idea of what's exactly happening across the globe. Dhruv, how are you doing today? Oh, hold on one second. Can't hear you.
Can you hear me now?
There we go. How are you doing today? It's been a week or so since we had you on the radio show, but happy to have you here.
Absolutely. No, thank you for having me again. Yeah, excited for our conversation.
Me too. And I think you have a really good idea of what's happening across the globe when we look at retailers and e-commerce. But first, what is ShipBob? Can you introduce yourself a little bit more and tell our audience exactly what ShipBob solutions are doing for your customers?
Yeah, absolutely. So at ShipBob, we help businesses of all size and scale get access to best-in-class logistics. And so what that means is, as an e-commerce retailer, you have your own website. Maybe you're also selling on Walmart, Target, Macy's, etc. And you need fulfillment centers to be able to ship your products, ship your orders from any of those sales channels that you get orders on. And that's where ShipBob comes in. We help merchants get access to this global network of fulfillment centers such that they can provide to their shoppers, to their customers, access to an affordable 2-day shipping while continuing to represent their brand through customized boxes, custom branded polymailers, etc. So it's really like think of us as Amazon fulfillment, but for everyone else who's not on Amazon.com.
Perfect. I think that's a perfect summary of exactly what you guys do. And so recently, Drew, I've seen a number of large retailers are having trouble with historically large amounts of inventory. We've seen it in earnings calls recently, and I've heard it in earnings calls. Have you seen these same trends as well? Especially, is the same thing happening to small and medium sized businesses? And how are you working with your customers to maybe get around that?
Yeah, for sure. Great question. So, it depends on sort of the industry vertical that these retailers or these brands are in. So we are seeing some brands who are continuing to do really well. And then there are some brands in their particular category, maybe outdoor, health and beauty wellness categories. Maybe their sales are not growing as quickly as they might have forecasted at the beginning of the year. So we are seeing inventory numbers go up in our fulfillment centers, which means for these brands, their inventory holding cost at ShipBob locations is going up. And so for us to sort of help them out over there, we are looking at these long-term storage options where merchants can move inventory from one of our active fulfillment centers to more of a holding or a warehousing solution, which comes at a much discounted warehousing price point. So, at least from our perspective, that's how we are helping merchants solve their inventory challenges by moving their inventory if it's not moving to a low cost option. We don't control the brand's pricing. So we are not able to, of course, brands can make decisions whether they want to discount products on their website to help it move faster. So that's one way that we are doing it. And sorry, I'll maybe say one more thing. And the second piece is, because we have access to all of the inventory or all of the SKU information inside our network of fulfillment centers for a particular brand, another way that we are helping brands is by helping them take that information and then make forecasts based on sales velocity and how much inventory, how many days on hand inventory they have to help them decide what should be the right reorder point or what should be the right minimum order quantity that they should order from the manufacturer. So using data and analytics to help these businesses who are generally not from a supply chain background make better supply chain decisions, that's another way.
Yeah, I was just going to ask, especially for the small and medium sized businesses, do you feel like they're struggling maybe a little bit more with this than larger retailers? Because yeah, you're right, larger retailers can just slash those prices down and usually get that out quickly. But it sounds like a lot of these solutions are probably a lot of what your small to medium sized customers are asking for a little bit more.
Yes, for sure. Well, I think there's pros and cons for in this environment for these small business retailers. So the advantage of being a small business retailer in this environment is you're just way more agile, and you don't have these massive inventory that you've ordered from your manufacturer because you always try to minimize your capital outlay towards manufacturing, and so you generally work with smaller inventory quantities. And so this means if the demand for any of your SKUs is going down, you're not left with a 1 year's worth of product. You just, maybe are out maybe 2 to 3 months worth of cash tied up to that inventory. So you're a lot more responsive and agile. You can pivot a lot faster than some of the bigger retailers. The second piece that which hurts businesses is the rising cost of acquisition, as is just skyrocketed, especially if you were advertising and finding customers on Facebook, social media, etc. There, these small businesses face a much higher sort of a problem because they don't have infinite marketing budget compared to larger retailers. There, ShipBob is taking a different approach. We are helping brands sell globally because global international markets still have a much lower cost of acquisition. So we can help take their inventory from the US to global locations for them to sort of take advantage of the global supply chain, global inventory locations that ShipBob has.
Yeah, I guess you're right. I didn't really think about that. They are a little bit more agile in their business model and what they can do, being smaller. So that definitely makes sense. You are a technology company, technology solutions for retailers, and of course, sometimes during these economic times, there's a lot of uncertainty. Some companies might hold off on technology investments, but why do you think it's important for especially e-commerce merchants to continue to invest in 3PLs or some technologies during these times to help them through?
Yes, well, because I guess access to a better supply chain solution helps bring down your overall operating costs, which then helps you take those savings and then deploy them back into sales and marketing to grow your business or retain them as profits for your business. So if you in supply chain, the beauty is like you can constantly optimize and shave off dollars and cents, which then add back to your business. And so in this environment where all businesses are trying to be very capital conscious, supply chain is one category where if you invest in the right partners, you can actually completely change the cost basis of your company, which in this environment that seems like a pretty important thing to do. And and so maybe supply chain software or supply chain innovation is not like a nice to have, it becomes a must have because it actually shows up in your P&L pretty quickly.
Yeah. Really, really interesting point. And I guess for you, do you have any like statistics that companies that use ShipBob, right, on how the improvements within their supply chain and how much quicker or maybe gains of customers that they have when they invest in ShipBob?
Totally. Yeah, I'll give you more of a tangible answer for merchants who join ShipBob. So most merchants, where they're shipping out of their own warehouse or their own, let's say if they're much on the smaller end, maybe they have their own garage or something. And so when you're shipping to the entire US from one single location, and let's say your one single warehouse happens to be, I'm in Chicago, so let's pick Chicago. So you're shipping to both of those coasts, New York and California, from a Chicago location, which happens to be in the shipping world like a zone 7, zone 8 shipping, where you have to pay a large amount of transportation fees to the UPSs and the FedExes of the world. And so when you compare it to using a company like ShipBob, we help distribute your inventory across the network. So now instead of shipping all of your coastal orders from Chicago, you're shipping your California orders from a California location. You're maybe shipping out your New York, New Jersey orders from a Pennsylvania location. You may be shipping only your Midwest orders from a Chicago location. So this way you can completely change the transportation costs for your business because these packages, instead of being a zone 7 and zone 8, they're more like a zone 1 or zone 3 shipping. And a zone 1 to zone 4 shipping might be closer to like $5 versus a zone 7, zone 8 might be closer to a 15 to a $20. So there's a massive cost arbitrage that you can take when you start working with a technology provider which has a network of fulfillment locations across the entire country, which is actually no different from how Amazon Prime works, except Amazon Prime is only for Amazon.com. And so, your ability to take advantage of a company like ours to reduce your costs, I think that makes a very tangible way for merchants to invest in this, especially in this environment.
Definitely. And on that note, if you were a merchant yourself during these times, large or small, media, whichever, what type of reporting and analysis would you be looking at most closely? And especially for maybe even the smaller businesses, what are you most concerned with to make sure that you come out the other side of this possible recession stronger than you were before?
Yeah, for sure. I guess if I break it down on the demand side, you may be looking at your top line, your revenue growth or your GMV growth or net sales, whatever you might call it, and pair it with your cost of acquisition, which is how much dollars am I spending to acquire that growth. And at some point, the math needs to add up. Where if you are spending $10 to acquire a customer, that customer then is hopefully generating way more than $10 worth of sales. So that's called like a lifetime value of a customer, because you hope that the customer will repeatedly come back to the website, buy more products, etc. So looking at sort of at what is the cost that you're incurring to acquire this growth, I think that's one important metric. So that's on the demand side. And then the second piece where ShipBob definitely plays a big part is on the supply side, which is, hey, what is the fulfillment cost and the customer experience that I incur as a brand in actually delivering this physical product to the customer, and how can I take advantage of this growing network that ShipBob has to reduce my overall transportation costs through ShipBob's network inventory? And two, what capabilities can I use at ShipBob to help deliver a delightful customer experience so that this customer becomes from a one-time transaction customer to a repeated loyal customer? And one of the ways that merchants do that is through, having branded boxes, branded polymailers, customized packing slips, really creating a delightful unboxing experience for the customer. And that should translate into repeated sales from that same customer, increasing their lifetime value. I think that might be another one. And the third one is maybe more on going back to the demand side, is what are the different channels that I am selling my products on? And are there channels that I've traditionally shied away from? Maybe that's retail, maybe that's getting into wholesale through, a drop ship through Macy's, Target. Like, are those relationships there that now I can extend the number of channels that I sell on outside of just being my own website? It could also mean selling into marketplaces like Amazon, Walmart, etc.
Awesome. Yeah, all agile moves, right? That they can quickly make, especially being a partner with ShipBob. And I guess for you, what is on ShipBob's horizon? Is there any integrations, any new tools that you're excited to dive into and offer to your clients?
Yeah, absolutely. The one which is, which we are seeing a lot of momentum in, which actually makes sense in this macro environment, is our new Merchant Plus offering. And so a lot of these retailers that we talk to, they say, well, I love the ShipBob network of fulfillment centers, but I also have a 3-year, 5-year lease on my own warehouse, and I have all of these warehouse fulfillment center associates that I simply can't, lose in this environment. And so, through our Merchant Plus offering, as a merchant, you can continue to run your own building using ShipBob's software, using ShipBob's warehouse management system. You can take advantage of ShipBob's network of transportation carriers, local and national carriers like FedEx, UPS, USPS, local carriers, which only operate in your particular area, and yet outsource a part of your fulfillment center to the rest of ShipBob's network and have access to all of the data, all of the insights that you would have gathered if you were only using ShipBob. So effectively, you can bring your own fulfillment center onto the ShipBob network and take advantage of all of the tools and the warehouse operating system that ShipBob has built for its own fulfillment centers, and continue to run your own building. So I think that offering a sort of a hybrid model, which is not fully outsourced, but you're not only using your own fulfillment center. I think that is a very powerful offering for merchants who might be, not quite fully there on outsourcing their fulfillment.
Awesome. Well, a lot of work ahead of you then, for sure. And to wrap up this episode, whenever I have a new guest like yourself on this show, I like to play a quick game called "What Kind of Consumer Are You?" that dives into kind of like these pre and post pandemic trends that we've seen from individuals. And being if you're in Chicago now, this one's even more interesting. One of my first question to you is, do you still grocery shop in the store, or are you using an app for home delivery of your groceries?
Yeah, no, we are doing an Instacart. We are definitely
Yes.
not doing a whole lot of in-person grocery shopping.
Yeah, I figured so. Yeah, that's the city that you're just. It's if the app's there, you're gonna use it for sure.
Yeah, plus,
Here's another. Yeah,
go ahead.
go for
Yeah.
it.
No, literally though, we have a Whole Foods and a Mariano's, maybe not a few blocks over, but still we are on Instacart.
Oh, I love it. Here's an interesting one. Do you still go to the movie theaters? And what was the last movie that you saw? If you are.
Yeah, no, we didn't go to movie theater for a very long time, but over the last month or so we did. So of course, I guess all of your listeners might be seeing the Top Gun, movie. So that's the one, the last Maverick. That's the one we saw last. It's a
Awesome.
it's
Oh,
an
that's a
amazing movie.
classic. So
Everyone should watch it. Yeah.
I haven't seen it yet. I actually just saw Nope yesterday, and that Crawdads movie this weekend too. So I'm getting back into it as well. It's slowly and surely. Well, hey Drew, thank you so much for coming on the show. I appreciate it. We'll have you back on soon to talk about your growth and exactly where technology is sitting in the e-commerce network as well. But other than that, we'll have you on soon. And thanks so much for stopping by.
Absolutely. Thank you so much for having me again. Look forward to the next one.
Love it. And for all of our listeners, make sure that you subscribe to this podcast. Wherever you listen to podcasts, make sure you go to freightwaves.com and subscribe to our newsletter as well. And you'll go check out my weekly show, or daily show, sorry, on SiriusXM every single day, Monday through Friday from 5 to 7 p.m. on the Road Dog Trucking Channel 146. Give us a call too. We love having callers in as well. Other than that, enjoy your day, and I'll see you guys next week. Wow.